All right, so here's day 26 of my journey to a $500,000 stock market portfolio. So first in this video, I'm going to talk about my total balance, my equity, and then I'm going to go through the trades that I placed today and also a trade that I'm going to place live, an earnings trade on AutoZone. Okay, so first of all, let's go through the balance. So it doesn't look too good. Things have dropped. Some credit spreads are in trouble, especially Netflix. All right, so equity, my margin is 47.09. Grubhub also fell, so that ruined my TFSA equity, which is about 56.476. Another reason why I don't like covered calls on individual stocks anymore because of that. And 69.83 in my RSP. So total equity has dropped to 78.168 when it was almost 82,000. So almost down $4,000 again. All right, so let's look at the trades I placed today. So I had a bunch of options that expired on Friday. So today I sold some options. So sold some on Square and Bombardier. So the one on Square, I had initially bought it at 69. So I went with the 68 strike because the stock is trading at 56. So I feel like 68 is safe enough. I don't think Square is going to jump from 56 to 68 by October 18. So I sold whatever I can collect, which was $20. So not much, very little, but at least I'm getting something out of Square while I'm holding on to it. Earnings is, I think, end of October or beginning of November. So I think after earnings, the stock might move. And actually, I think this happens all the time. It drops before earnings and then it just jumps up after. It's been trading between 50 and 70 for a while now. Regardless, this is what I had to do with Square. And then Bombardier, I bought it at 182. First month, I sold a call option. It expired worthless. Second month, now I'm doing the same thing. I sold at a $2 strike, so it's safe. It's above my cost of 182. I collected 6 cents, so times 800 shares. All right, so these were the two trades I placed in my RSP. Now in my TFSA, I had a lot that had options expiring. So first of all, Teva, I sold call options on Teva at an 8.5 strike. My cost on Teva is around 15, so this is a big risk, but Teva is trading at 7.23. So I collected 7 cents times 500 shares, expiring October 18 at an 8.5 strike. And then I also sold call options on NEO at a 3.5 strike. My cost on NEO is 5, and right now it's trading at 2.73. I think earnings is tomorrow, so there might be a big move, but I don't care if I lose it at 3.5 because I'm just tired of holding on to losing stocks and trying to extract something from it by selling call options that are closer to the current market price, and that market price being much lower than my cost. So if I can get my money back and I'll just readjust my strategy, I'd rather do that. So yeah, but that's what I did for now. And then CHK, same thing, sold at a 2 strike, but my cost is about 2.8 on CHK, but I've got 1,100 shares. So I sold at a 2 strike. The stock is trading at 1.5. So I just needed to stay below 2 come October 18. So it's possible. And also Bed Bath & Beyond. So I had an average price of 12.45. I went with a 12 strike because, like I said, I just want my money back. And so worst case, if it trades above 12, I get my money back at 12. But I sold a call option at 27. Plus I've been selling call options on Bed Bath & Beyond for a while now. So I won't lose much even if I sell my shares at $12. But at least I get my money back. And who knows, maybe it will not surpass 12, then, I made a good deal, collected 27 cents on $12.45. And if we look at my QQQ trade, remember I bought at 191.01, it dropped a bit today, but now look at it, it's close to 191 as well. I collected $151 from it. It's worth 128 right now. So this one expires this week. So it's good to see that the Q didn't fall off too much. Now Grubhub dropped hard today. It's at 57. I bought it at 70. My cost is 70. So I was thinking, so the options that I sold here for $1.20, I was thinking of closing it and then selling another one for 2 weeks out or 1 week out, collecting 50, but it's not going through. Actually, let's see what it's trading at. So it's something between 0 and 60. So about 30 or a little bit less than 30 is what I can get. So probably not going to do this trade. And now in my margin account, so SNC, the stock that I bought at 22, I collected $40 on that by selling a call option at a 22 strike. It's a stock that I bought, sorry, at 21.75. So this is the third month that I sell a call option and a decent premium as well. Even when it was trading at 16, I was still able to collect $25 from it. Now it's trading at 20 and I collected $45 at a 22 strike. I've got United States Steel. My average cost is about $18. I ended up selling at a 13 strike. So same as last month, I ended up selling at a 13 strike while the stock is trading at 11. While the stock is trading at 11, I collected 8 cents per share. Got 400 shares. Zillow, the stock was trading at 30. I bought it at 34. My cost is 34. I ended up selling a call option at around $35, expiring October 25th. I sold a put credit spread on FedEx. After earnings last week, it dropped hard and it continued to drop. So I went with a 138 short strike, as you can see here. So where's FedEx over here? Expiring October 25th. I went with a 138 put and a 135 long put. So the max loss is $300 minus whatever I collected. I believe I collected about 60. I don't even remember. Too many trades to keep track of, but here, let's calculate. 181 minus 125. So collected $56, risking $244 by October 25th. As long as FedEx stays above 138, I keep my max profit. Because it dropped already a lot, my assumption is it's not going to drop even more. It's going to either stay steady and start to go back up again because it's not a bad stock. I also sold an iron condor on IBM. This is short term. This is only expiring October 11. I went with a 147 call and a 137 put. So these are my ranges. And I collected, I believe, about 50. I didn't collect much, and I went $3 wide. So my max loss is $300 minus the credit that I received. And the credit that I received is 45 minus 12 plus 70 minus 37. So $66, risking the difference of 300 minus 66. As long as IBM stays between 147 and 137 come October 11. It's got earnings the week after, so that's why I didn't want to pick an expiry date further than October 11. So I've got some credit spreads that are profitable, but because of commissions, I cannot close them early. I have to hold on to them. This one here, for example, collected $80 to open the trade on Alta. As long as it stays above 215 come October 18, I can probably close it right now for about 50 or 45. So about $50. That gives me a profit of $30. But then after commissions of $12, I'm not left with much, of course. So this is something that I'll hold on to it. Alta's trading at 237 right now, and my short strike is 215. I've got Tesla. I believe I collected $150 on this trade. I could close it right now for about 115. So making a profit of $35, but with commissions, it's not worth it. I'll have to hold on to it a little bit longer. I've got this Roku put credit spread that I placed on Friday at an 85 strike. Right now it's at 106. This one is still early to do anything with, but I'm glad that Roku is staying above 100. I've got this NVIDIA trade here. I believe I collected $112. Right now, look, I could probably close it for around $70 or $72. But once again, with commissions, it's best to hold on to it a little bit longer. But I mean, if commissions were low, you could see how you can be profitable with credit spreads. You don't have to wait that long to close out trades and then place new trades. Netflix is not doing so good. So I opened an iron condor with a 275 put strike and a 317 call strike. So my upper limit is 317, my lower limit is 275. The stock is trading at 264 right now. So it already went past my lower limit. Normally I would close it early and just place a new one, but I think Netflix should not be trading at 264. I think it will go up before October 11. So I still have 3 weeks left in the trade. I don't want to make an adjustment too early, but if I would close this trade completely. So my call side was profitable. My put side is going to be a loser for sure, but they compensate each other a bit. So I'm going to end up paying maybe 170 to close this whole trade, but I believe I collected, I think it was $80. Yeah, I think it was about $80 to open this trade. But then I'll collect more of a credit when I place a new credit spread a little bit lower. So like 240, maybe 245 and 300. I already have another Iron Condor on Netflix at a 255 strike. This one I placed on Friday. This one's not doing so well either because when I placed it, Netflix was trading at 275. Now it's at 264. So this trade here is losing money right now. But at least it's 10 points away from my short strike. So I still have time for this trade to become profitable. So I won't take any action right now just because I have time. Micron is doing well. I placed it when the stock was trading at 50 and it's still trading at 50. So it's showing a small profit, as you can see here, 40 minus 15. So it's about $25 profit. But of course, with commissions, it's not worth closing right now. But it's good to see that I've got some trades that are going the right direction. So Dell was a covered call trade. CMG, I made an adjustment to CMG. So I had a call spread on CMG at about 8.55, expiring October 11. As you can see, CMG is trading at 8.47 now, so it's getting too close to my call side. So I decided to close it. I closed that 8.55 call side for a loss, but I sold a little bit higher at 8.90, and I went 1 week further, so to help me collect a higher premium. And then I sold a put side as well. So before I only had a call credit spread, but now I added a put credit spread at around 800, allowing me to collect more of a premium to compensate for the loss when I closed the call side that was getting tested at 8.55. So now for this trade to be profitable, I need CMG to stay below 890 and above 800 come October 18. And looks like it has a good chance of doing that. And anytime I can close the trade early if the whole trade is profitable. I've got a bad trade on Amazon though. I placed it, I think Thursday, and I placed it when Amazon was trading at 1830. Now Amazon is trading at 1786. And my put side, this is a put credit spread. So I need Amazon to stay above 1760 for me to be profitable. It's getting very close to my 1760. I think I collected $80 from this trade. Right now it's worth 160. So it's almost worth the double. An option would be for me to close this completely and then sell an Amazon put credit spread at around 1690 maybe, or even 1700. But because it expires October 11, I think it still has time. I think it might be early for me to make an adjustment given that it's Amazon, it's before earnings. So this trade, earnings does not affect this trade. So I think I still have time for Amazon to come back up. But definitely it's something you have to watch in case you have to manage. Apple, for example, this is a good trade. I can actually close it for a profit. I think I collected here, I could close it right now for about $47. And I think I collected, let's calculate here, 148 minus 104 plus 181 minus 146. So collected $79 on this trade. I could close it right now for about 47. But then of course with commissions, not worth it, right? So $16 commission in and out. So I'd make $16 profit. So I'm gonna hold on to it a bit more. Ideally, I would like for it to expire worthless, so I keep the full profit, but it's kind of risky to wait till expiration because anything can happen in the last week. I've learned that if you have a chance to close it for a decent profit, close it for a decent profit. All right, so let's get to the earnings trade that I want to place. So there's 20 minutes left to market close. I want to place an earnings trade on AutoZone. It's trading at 11.57. So there's two earnings trade before market open tomorrow. So I want to place the earnings trade before market close today. CarMax was one of them, but the premiums on CarMax was not interesting enough. So if I do an iron butterfly just to see what the expected move is, so I usually go for at the money premium, so 87. If I go to 87, just to see what it's trading, how much the premiums are worth, just to get the expected move. So 87, 87, $3 and $3. Actually, this one's 380. So $6, $7. Let's say $7. So let's say the expected move is about $7. So if I go $7 up, the current market price, which is 87, so 87 plus 7, 94, and then I go 87 lower, so 80, and then let's say I go 5 point wide, or yeah, let's go 5 point wide. So I'm at 80, I'm at 94. 94 plus 5 is 99, and then on this side, on the put side, I would take a 75 put for protection. All right, so let's see what I can get. So I'd get about $1.10, $1.20 out of this trade, but I'm risking $380. and I would need CarMax to stay above 80 and below 94 after earnings tomorrow. So risk to reward, I don't think it's that great. I am losing $380 versus making $120. Not sure it's something I want to take. So I'm gonna look at the other earnings trade of AutoZone. So right now it's trading at 11.57. So let's do an iron butterfly just to see what the expected move is. So 11.57.2. So the closest strike is 11.57.5. And if I calculate the premiums, if I add them up for the at the money strikes, I've got 34 and 34. So let's say 70. All right. So let's say expected move is 70. So if expected move is 70, I want my iron condor to have a range of 140 or 70 on each side. So 11.57 plus 70 is 12.27. So that'll be my call side. And then 11.57 minus 70 is 10.87. So that'll be my put side. Okay. So 10.87 and 12.27. So now if I go choose I forgot already, 12.27 call strike, 12.27.50. Okay. And I'm going to go 2.5 points out. So that's my max loss. So 12.30 is my option for my strike for protection. And then we said on the put side, I go for 10.87. I'm going to go a little bit lower. I'm going to go to 10.85. And then I'm going to take a 10.82.5 protection strike. All right. So let's bring it together just to see it clearer. So 10.85 put with a 10.82.5 protection, and then 12.27.5 call with a 12.30 protection. So 2.5 points out. And look at the spread. The spread is crazy, but let's see what I can collect from that. So 5.9 plus 3.8, or sorry, it's 5.9 minus 3.8 divided by 2. So $1.05. That's the mid price. So let's go for $1.05 here. So max profit is $1.05, but max loss is $2.50 minus, or $250 minus $105. So it's a decent risk to reward ratio. So 105. All right, so let's review the trade here. So I'm selling a put at 10.85, okay, and buying the 10.82.5 put, okay. Sell to open, buy to open, and the call to 12.27.5, okay, and 12.30, same width. Sell to open, buy to open, call, put, 105, $8 commissions. 10.85. 10.82.5, 12.27.5, 12.30. Send order. Now it might not go through. I'll have to keep adjusting the order. Here, let me close this iron condor I had on the SPY that didn't go through. Let's see what it's trading at. I had an order of 108. Yeah, it's not going to go through. All right, so I'm just going to close it. All right, so let's focus on AutoZone. So I have 105 here. It's not going through. Let's try $1. Not going through either. Let's try 98. All right, 95. Should I maybe change my strikes? 11.56, the stock has dropped a bit. No, I'm still 70 point wide on each side, yeah. Maybe the call is 71 point wide and the put is 71 as well. I think that's safe, right? I think it was 11.57. Yeah, I was at 11.57. Now I'm at 11.56, 10.87. No, I think I'm good. My strikes are good. Oh, well, it's already dropping, but it won't go through. All right, my final trade is 90. I don't want to go lower than that. I was happy with $1. Actually, let's do 92. It's not going through. That's the problem with earnings trade. You don't get the price that you want. So let's look at what the mid is again. So 5.6 minus 4.2 is $1.40. So what? So it's 70 cents now? No, I'm not going down to 70. 5.6 minus 4.2. Yeah, it looks like it's going to be 70. No, I don't want to do 70. Not the same risk to reward ratio anymore. Okay, let's do 90. So I've got 12 minutes left till the market closes. All right, I'm disappointed. I don't want to go. See, now it's dropping. Maybe I can bring my 12.27 closer to get a better. Yeah, I guess I could do that. Yeah, I think I'll do that. 12. Yeah, I'll bring my call strike closer. I'll leave the 10.85 as is. Yeah, okay. I'm gonna cancel this whole trade. All right, let's place a new one. So we said 70, right? So 70 plus 11.55, 12.25. So let's do 12.25 on the call side, and then 12.27.50 for protection. Okay, and then 10.85 on the put side, and 1082.5 for protection. Hopefully this one goes through. All right, so it's trading at 1155.19, so very close. Am I exactly at 70 points? So 1155 minus 70 is 1085, plus 140 is 1225. So 1225, 1085, 2.5 wide, 2.5 wide. All right, let's go for it. Oh, that's terrible, man. Looks like it's the premiums have changed. You know, I'm gonna put $1 and start from there. Collecting $1, 2.5 wide, 1085, 1082.5, 1225, 1227, 5. All right, then I'm gonna start changing it if I have to. So 380, so it's $1. It looks like I can only collect 50 cents. That's weird. The premiums have dropped, but I went closer. So it looks like I can only collect $35 out of this. This doesn't make sense. Okay, this doesn't make sense. I'm just gonna leave it as is at $90. If it goes through, it goes through. If not, then I missed out. But right now it's showing me the mid price is about $20 or $30. So obviously it's not worth it. But at around 3 o'clock, it was giving me almost $1 mid price. So I don't understand what's going on. I'm gonna leave it at 90 as long as my strikes are good. 1085 and 1225. So I might not get this trade, but let's go back and look at CarMax. CarMax usually moves hard after earnings. So I think we said the expected move is about $6-7. Yeah. So let's say I add $6 to the 87, then I'll be at 93 instead of 94. Let's add 2 point wide only. So 93 plus 2 is 95, and then I'll go 81 plus 79, 81 and 79. So I'm 2 point wide on each side. Maximum loss is 200 minus the credit of, see here, yeah, it's crazy. I don't like this either. So 110, $60. No, forget this. I'm not doing this trade. This one should go through though. This one's giving me almost $1. Oh look, it's already dropping. 1153. Wow, 1152. Wow, it's taking a hard drop. Let's see if I just do the call side at what we said, 1285. No, 1225. Okay, let me try 87. Got a minute left. All right, 85 is my final. If it doesn't go through at 85, too bad. I should have done this earlier. When I was looking at it at 3 o'clock, it was giving me almost $1. Now it's giving me 0 or even less. All right, so it looks like I'm gonna miss out on this earnings trade, but this is how I normally place earnings trade. But this one, unfortunately, isn't going through because of the premiums. So yeah, this was a quick overview of day 26 and the trades that I placed today. So if you have any questions, leave them in the comments section below. Any suggestions as well. I'm open to all feedback. I'm always looking for the right strategy, or the right strategy that allows me to generate consistent income. I mean, it really depends how you see your investment account. Some people see it as just equity that they're trying to grow, just to have a big equity. But I'm trying to see it as something that allows me to generate income. I want that capital to provide income for me every month. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.